dreaming of owning a home in the U.S., but the prices seem sky high? Well, the housing market is changing. After years of crazy growth, many experts are predicting a correction. We'll tell you about 10 states where, according to analysts, real estate prices may fall soon. This could be your chance to find the home of your dreams at a more affordable price. Let's get started. To compile this ranking, we analyzed key economic and market indicators that point to a potential cooling of the real estate market. This is not a precise forecast, but rather an analysis of risk factors that could lead to price drops. Our analysis is based on 4 main criteria. Market overheating. Did the state experience overly rapid and unsustainable price growth between 2020 to 2023? The sharper the spike, the higher the likelihood of a correction. Increased inventory. Is the number of homes on the market growing? When supply exceeds demand, sellers are forced to lower prices. Population outflow. Have people started to leave the state? Migration flows are a key indicator of economic health and housing demand. Economic vulnerability. Is the state's economy dependent on a single industry, or is there a slowdown in job growth? Rising unemployment and economic instability directly affect purchasing power. Nevada. Primary reason: excessive reliance on tourism and rapid price growth not supported by a stable economy. Nevada, and especially Las Vegas, is a prime example of a state where the economy is highly dependent on a single industry: tourism. During the pandemic, when travel stopped, the state's economy took a big hit. Although the tourism sector has since recovered, the real estate market in major Nevada cities, like Las Vegas and Reno, experienced a sharp price increase driven by an influx of buyers from more expensive states like California. However, this influx is now slowing down. Analysts note that real estate values in Nevada have risen so much that they have surpassed local purchasing power. According to market data, the number of properties for sale is increasing, and the average number of days a house stays on the market is growing. These are signs that demand is weakening, and sellers may have to lower prices to close a deal. Some experts predict that prices could fall by 5 to 8% over the next year. This decline could become an opportunity for investors and buyers looking for homes at lower prices. Oregon, particularly its largest city, Portland, was a magnet for migrants for many years, especially from California. This led to significant housing price growth. However, the situation has started to change. According to recent data, Oregon is among the top 10 states with the largest net population outflow. People are leaving due to high taxes, the rising cost of living, and some social issues in the major cities. Furthermore, the technology sector, a vital part of Oregon's economy, is undergoing a period of slowdown and layoffs. This directly impacts the real estate market, as fewer people with high salaries are moving to the state. As supply increases and demand decreases, experts believe that housing prices in Oregon could begin to decline. This will most affect the suburbs of Portland and other cities where prices grew the fastest. Texas is a state that experienced a real estate boom during the pandemic thanks to a massive influx of people and corporations from other states, particularly California. Lower taxes, no personal income tax, and a generally lower cost of living attracted millions of new residents. This led to soaring prices. However, the construction industry in Texas responded to this demand incredibly quickly, leading to overbuilding. Now, the real estate market in Texas is characterized by a high number of new homes waiting for buyers. In cities like Austin, Dallas, and Houston, the number of new properties for sale has reached record highs. This creates a supply surplus, forcing developers and sellers to lower prices, offer bonuses, and other incentives to attract buyers. Analysts believe that Texas is one of the first states where the bubble will begin to deflate, and prices could fall by 5 to 10%. This creates a great opportunity for those who have dreamed of owning a home in Texas, but couldn't afford one before. Utah is another prime example of the coronavirus real estate boom. Thanks to remote work and the desire to live in states with good nature and low crime rates, many families moved to Utah. This led to an incredible increase in housing prices, especially in Salt Lake City and its surrounding areas. From 2020 to 2023, prices rose by over 50%, one of the highest rates in the country. However, this boom proved unsustainable. High prices are deterring potential buyers, and rising mortgage rates have made housing unaffordable for many local residents. According to recent data, Utah is showing a significant increase in housing supply on the market, and the time it takes to sell a home has increased. Experts believe that the real estate market in Utah is overvalued and that prices must fall to return to more realistic levels. This creates a unique opportunity for those who hope to find a home in this scenic state, but couldn't compete with buyers from other regions. Ohio is an example of a state where real estate prices may fall not because of a bubble, but due to fundamental economic problems. Ohio never experienced the same rapid growth as Florida or Texas, but its economy, which traditionally relies on heavy industry, is showing signs of stagnation. Job growth is slowing down, which directly affects the real estate market. When there are no new jobs, there are no new people to buy homes. Additionally, Ohio is one of the states experiencing a small but steady population outflow. Despite relatively low housing prices, the lack of sufficient economic opportunities forces young professionals to seek better prospects elsewhere. This leads to weak demand for real estate, which, combined with the current level of supply, could lead to a decline in prices. This drop will be more gradual, but it could be an opportunity for investors looking for long-term investments at low prices. Colorado, and especially Denver, has been one of the most attractive real estate markets in the U.S. for many years. Thanks to its beautiful nature, developed tech industry, and high quality of life, the state attracted many new residents. This led to extremely high housing prices. However, this market is now facing serious challenges. High prices and high mortgage rates have made housing almost unaffordable for many local residents. This has led to a sharp increase in the number of homes on the market. According to analysis, inventory has grown by 30 to 40% over the past year. When supply grows so rapidly and demand weakens, prices have to correct. Experts predict that real estate prices in Colorado could fall by 5% or more. This correction is healthy for the market, as it will allow prices to return to more realistic values, making housing more accessible to local residents. Idaho, and especially Boise, is one of the clearest examples of a real estate bubble that emerged during the pandemic. Before 2020, Idaho was a relatively affordable state that attracted people looking for cheap housing. However, when remote work became the norm, millions of Americans from expensive states like California started moving to Idaho. This caused a frenzy, and real estate prices in Boise grew by almost 70% in 2 years. Prices rose so fast that local purchasing power couldn't keep up. According to analysts, the real estate market in Idaho is one of the most overvalued in the U.S. Now, the situation is changing. The number of properties on the market is increasing, and prices are starting to fall. This is a healthy correction that should return the market to a more stable state. Experts predict that prices could fall by 10% or more. This is a huge opportunity for those who hope to invest in real estate in this scenic state. Arizona is another example of a hot market that is beginning to cool down. The state, particularly the cities of Phoenix and Tucson, experienced significant housing price growth driven by mass migration and the state's rising popularity. A mild climate, relatively low taxes, and economic opportunities attracted millions of people. However, the construction industry responded to this demand, leading to overbuilding. Now, the real estate market in Arizona is facing two problems: a surplus of supply and a decrease in demand. High mortgage rates are deterring many buyers, and the massive construction of new homes creates competition among sellers. This forces developers to lower prices, offer discounts, and other incentives to attract buyers. Experts predict that real estate prices in Arizona could fall by 5 to 8%, which would allow the market to stabilize. Washington, and especially Seattle, is the epicenter of the American technology industry. For a long time, the arrival of highly paid professionals from Microsoft, Amazon, and other companies fueled a frenzy of housing price growth. In recent years, real estate prices in Seattle have reached some of the highest levels in the country. However, the market is now facing the consequences of a slowdown in the tech sector. Job cuts, hiring freezes, and the departure of some employees are affecting housing demand. According to market data, inventory is increasing and the number of sales is decreasing. This is leading to a drop in prices. Although the real estate market in Washington remains strong, it is no longer as hot as it once was. Experts believe that prices could decline by 5% or more. This is good news for those who dreamed of a home in a tech hub but couldn't afford one. Florida is the state that, according to analysts, will face the biggest drop in real estate prices. During the pandemic, the state experienced an unprecedented boom driven by a massive influx of people from other regions. Affordable prices, no state income tax, and a warm climate attracted millions of people. However, this boom proved unsustainable. Now Florida is facing three main problems. High market overvaluation. In recent years, prices have risen so much that they have exceeded local purchasing power. This has created a classic bubble. Insurance issues. The cost of flood and hurricane insurance has increased several times over, making homeownership in Florida extremely expensive. This is deterring many buyers. Overbuilding. The construction industry responded to demand, and now the market is flooded with new homes waiting for buyers. Analysts predict that real estate prices in Florida could fall by 10 to 15% or even more. This could be a real opportunity for investors, but also a challenge for sellers. This decline will be painful, but it is necessary for market stabilization. So, you've seen the 10 states where the real estate market, according to analysts, is beginning to cool down. But what does this mean for you? First, don't panic. A drop in prices doesn't mean the market is completely collapsing. It's just a correction that is necessary after years of crazy growth. For many, this is good news. If you were in the market but couldn't afford a home, you now have a chance. This could be the perfect time to enter the market, especially if you are ready for a long-term investment. Second, do your own research. Although our analysis is based on data, the real estate market is very local. Prices can fall in one city but rise in another. Pay attention to the specific cities you're interested in and analyze local trends. See what industries are key to the city's economy, whether employment is growing, and if new homes are being built. Third, work with professionals. Working with an experienced real estate agent is key. He or she will be able to provide you with current information about the local market, suggest promising areas, and help you find the best deal. Don't be afraid to negotiate, especially in a buyer's market. Fourth, be ready to compromise. In a changing market, it's important to be flexible. You may have to consider different neighborhoods or types of housing. Your flexibility can be a key advantage.